Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Actually, interesting on the dashboard today. We have updated data. It's updated manually, so it's not quite automated yet, but nonetheless, at least Sjord showed us that he is making progress. So that's encouraging, and of course, it just shows us, holy crap, the market's falling apart, everything's down. I don't know whether these individual data points are actually reporting correctly. It's still Mondays. Sjord does a site update report, so today was all about what Sjord's doing on the site, and super busy. Screeners coming along nicely, and now it's just a question of stability of the data and stuff like that. And so what he's basically told us is when you see this updating on a daily basis, then you know that the site data feed is stable, and this becomes now a usable product for us. So, man, we are working diligently to get this thing up and running. It's a lot of work, and Sjord's just done a yeoman's job. So way to go, Sjord. Keep on keeping on. For our conversation here, I spent a good couple hours talking to you guys yesterday about corn and the market and stuff like that. So there's not a heck of a lot new to report here, although what I have seen is a bit of the risk appetite has come back to the market. So it's not really shocking to see that crypto's caught a bit of a bid. The question ultimately here is, does this actually set up any new trades? And I think we're still way too early to start calling bottoms and looking for new bulls. But we'll see how it goes. Only time will tell. As you can see from this US dollar index, holy moly, this is a screwy world we're in here, right? I mean, you could go through year periods where you wouldn't see this kind of volatility, but man, it is just all over the place. I'm not even quite sure exactly what the new coronavirus scuttlebutt is here. Interestingly enough, when I looked at the broader market, I saw the general consensus that the market has decided that the Fed has to act in the United States. And what I mean by the market has decided is, rates are being pushed by the market itself versus sort of the Federal Open Market Committee setting a target rate. The market has targeted, you better lower rates because we are in mass deflation mode right now. Is this real? Like actual, oh my goodness, the data is falling apart? Or is this fear that coronavirus is going to lead to this? I don't really know. Clearly the market told us that rising interest rate theses were wrong actually a couple months ago, I suppose now. And, I think, you can even see it in the data, right? This, we were riding the market short and everything was working along, and then all of a sudden all these W's start coming in here. Interesting how they really started to come in here back November, December. So you could make the argument that what we're seeing now here was actually the base of this move was actually being painted there in December, January. The sad part about it, of course, is where do you think the public comes in? So the public, of course, is now freaking out. If you look at any bond ETFs and stuff, they've all gone absolutely haywire. We have been talking to you guys recently about, let's see, where the hell is it? I think it's this church. Wow. Talk about a great lesson in running stop management strategies. Whew. Sure, I'm glad I took profits and then, of course, moved stop to scratch on remaining. Just avoid all this mess. Oh, my goodness. Bad situation. But looking at the bonds, that's what I wanted to show you. Where the hell are the bonds? I got two of them. Did I put it away? Oh, that would suck. I might have closed it. Ah, darn. Oh, no, maybe it's over here. Yeah, but I had a different chart on. All right, bear with me here a second. I don't know. I mean, today's video on the site was a good hour and a half. So if I'm kind of slow here today, bear with me. Yeah, I like to have the gold chart on there. And then maybe let's put that back to like 2 hours or something. Yeah, there we go. Okay. I was talking a moment ago there about the bonds. And as we had sort of said, thesis is about rising interest rates were proved wrong. What is that? That's 1, 2, 3, 4, 5, 6, 7 trading sessions ago. Interesting how we've come down into fun little chaos theory levels. I get the feeling maybe things have gone a little bit too far. And I did notice you can see the bond prices themselves. They're actually starting to M out a little bit. So I've talked to you guys a lot about this recently. You know, ideally what we want to see is long consolidations, and then we play the breakouts. So I also talked to you guys in this little chart deck about how we did technically have this one trend line that defined that market. And I even sort of said, well, if you are bond bullish, you could even be hunting bot long setups to play that. And I got a funny feeling that that's been hit. Actually, I didn't do that with the kids on the site today. Let's see if we can do that here. And the irony of it all is probably the long trade is set up just absolutely textbook. But let's see. Boom, boom. There's 33. And project that up. What do you get the impression 25 is going to be like right off that level? Boom. Well, sort of in there. I mean, it wasn't the prettiest, but nonetheless, levels are levels. So I think that long trade idea is actually finished. You know, am I still thinking short? No. But could we see a 50% retracement in this range? Absolutely. And my hunch is probably we're going to have to come back and revisit this trend line here. So if things have maybe calmed down a little bit in the big world, you know, it's interesting, you know, the sort of risk on, risk off. I do see that stocks, of course, are trying to stabilize here. You know, we have an old rule in the market that we really don't want to believe anything until we see 38.2 resolved, either up or down. So if we throw on 38.2s over here, you see that, oh, gee whiz, we still got a couple more points to go to the upside. And probably, but you never know, I'm probably going to look something like that. So I think stock market's enjoying that dead cat bounce. Notice they did open up the market lower overnight. So they did get a lot of people caught going short here. And of course, and interestingly enough, Bitcoin, all the major cryptocurrencies, they all actually look very similar to this. So what we're basically saying is if this is the bottom, we'll put in some sort of pivot high here. And then we actually have to see the next candle, it actually go up. Whoops, that was a terrible line. It actually has to go up. Oh, you did it again, you son of a gun. Oh, well, I guess I can't do that. Anyway, it has to go up through this line, right? So that will be our buy signal. So, you know, if you were hunting lower time frames, you want to let this candle finish, create some sort of consolidation, and then if we break out through the consolidation top, then that's your buy signal. Probably not the kind of trade I'd be interested in. You know, me, I would much prefer this thing rally up to 38.2 and then come back down into reload zones of sort of this kind of range and then give me a nice W and I'll buy that. So we'll see what happens. It's interesting. There are a number of stocks that I actually have been buying in the market over the past couple days. And there are some stocks that have, which we'll get to later, which have gone absolutely apeshit. So, I mean, I got nothing to complain about, but nonetheless, do I have a buy signal here? No. We're still in dead cat bounce territory. It is interesting how I've turned somewhat bearish of the oil. I do think that there is going to be some sort of very typical seasonal rally. they're going to say, buy your unleaded middle of February. My hunch is, any commodities brokers, they're going to use a price point here and sell your unleaded middle of May. You made money 9 of that past 10 years. I wouldn't be surprised if oil is higher here at some point down the road. But what I don't really like, now I've got one of my 3 oil stocks that I bought still on the books. If it breaks down, I'll walk away from it too. But what I don't like is now we have 2 AB equals CDs, boom, 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 and boom, 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 painting down into this sort of, mid to low $30 area. I don't, key reversals are usually a good sign that the bottom has come in. You can see the potential key. This will be a single bar engulfing pattern reversal. Key reversal would mean we'd have to recapture this high, which would probably mean that we're back in that range. I don't know whether we're at that. Kind of like stock market. If this is a single bar reversal, maybe we get a consolidation and then a break higher, which creates a buy signal. But it's not quite like key reversal kind of talk yet. It's an up day, nice engulfing pattern, but notice the rally stalled right at the gap here. So we'll see how that goes. Long and short of it here is I'm not really that interested in energy going forward. Strong opinions, loosely held. I did like the seasonal trade, but I don't need to force. There are other ideas out there, and frankly speaking, I shouldn't be a commodities bull anymore. Commodities was last cycle's story. That story's over. I want to be investing in growth now. So, risk on, risk off. I mean, it's an absolute mess right now. I don't even really want to be invested in either of these assets anymore, to be honest with you. I would like to try and actually focus my attention on growth and growth stories. And interestingly enough, I think I've talked to you guys lots about this recently. I think all they did was they just backed price up into the original bottom, and Wall Street made out like absolute bandits, thieves on that January leaps expiry, and nobody in the public is talking about it. They're totally distracted with stupid, not stupid, distracted by a news event that I think has been helped along by powers that be. There's so many little tells here that tell me that the people that we trust in power are using this as a tool against the public, which really pisses me off to no end. But anyway, that's the world we live in. Moving on to the, what am I actually doing in the market today? Here's a really good example where, let's try and get in on names that put in W's and just let your money work. And as you can see, this stock had a huge up event here today. Hint, 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 if you ever see the words cancer and success in the same sentence on a headline, probably your stock's going to go crazy. Really, my job at now, I've already sold half on a double. So really, I have no risk on this trade whatsoever. My hunch is it'll probably be taken over by a big major down the road. But my job actually is just to keep letting my money work for me. And here's an example where I had an idea. I tried to go in and buy a W, and the idea did not work. And I didn't freak out. I didn't panic. I'm managing my money. I put my order in to sell it at the level I wanted to sell, and you can see today I got filled and I exited. The key here at the end of the day, you are never going to be right 100% of the time. Get used to it. But the key here has got to be to make sure green boxes are substantially bigger than red boxes. That's the key to winning at this game. So, as you can see, green boxes are bigger than red boxes. I'm feeling pretty good today. As for the corn, kind of like what my comments about the stock market, I get the feeling that part of the selling late last week, and really you could argue same thing with gold, was we got into a situation where assets just got so destroyed that they were just reaching for anything to sell. I got to raise money. I got margin calls. Hey, I'm still sitting up a bit on that silly corn that Beamish guy got me to buy down there at 7,500. All right, just hit the bid. I need the cash. That's the impression that I got, right across the board on almost every asset heading into the end of last week. So, yesterday, like I said, we had a very long broiler chicken show talking about the corn and sort of, what were sort of anticipated outcomes going forward. I had left off the conversation yesterday, and keep in mind we were putting in this nasty little pin bar here yesterday. Just sort of saying, you know what, I don't really have a buy signal. There's nothing for me to do right now, but I could definitely see two different scenarios. We could definitely just do a straight line dump into RLZs, which actually is what I wanted to see and prefer to see. Would have given me my fill on some of my altcoins I want to buy. Or, and it turns out that this is the more realistic scenario, we could have potentially be carving out an interesting head and shoulders pattern, which would imply a rally back up to test things like this previous range, this high. This, remember we did on the stock market just a moment ago. Where is 38.2? Oh, there it is. What a coincidence. That's right up against this high there. Top of value. We talked about that. Interesting. We didn't really talk too much yesterday about these charts, but notice 13 EMA on Bitstamp here is sitting right now at about 9,100. I think we could actually maybe even probe a bit higher there. We talked yesterday about how moving average crosses, usually you should see a check of the moving average cross. In essence, that is happening on Ethereum right now. We talked about how, if you were short inclined, you could think about working shorts on Ethereum. And in essence, those short setups, they are working and their stops are against those highs right now. So you can see, interesting how 200 SMA right now is putting a lid on the rally. But you can see that, those shorts are still technically on, and they have about, what, I guess right now we're sitting 231, 237. So they got about $6 or $7 of wiggle room left on that idea. But nonetheless, counter trend rallies, and, I do actually like the idea that this was nothing more, especially on Ethereum, the moving average crossed bearishly, and you should expect a check on the other side of that event. I think that's probably a really good analogy of that. Also, too, kind of like with Bitcoin, you can see Litecoin 13 EMA here. It's coming up against this wick here. So I got a funny feeling, you can see it on all three of them. This wick, and this wick, it looks to me like the market wants to explore those levels. If you are interested in, actually, I'm going to leave it at that for you guys. In the daily brief, we talk lots about short-term price objectives, reversals through reload zones, and really it doesn't surprise me that we're going to get some sort of rally on the corn back up against those wicks that I just showed you there a moment ago. And we actually had a really, really good little intraday, very fast. This is a 1 hour chart. Nice little setup last night to get people long. And it shouldn't really surprise anybody. Top of value, chaos levels. That candle peak that I just showed you, wicks like to be eaten. 13 EMA on the dailies coming down here. It shouldn't surprise us that we rallied up into this window. The only other thing I'll add to this video, like I said, higher time frames, these setups I like to show you guys, there's nothing for me to do right now. It's just sort of sit and wait. If I start, seeing W's in here, well, then maybe I can start justifying taking shots right now. Still think this is dead cat bouncy, and we probably want to rally up into on Stamp here. This is about 9,200. And notice, remember, we showed you on OKCoin, those upside objectives are around that 91, 9,200. So, dead cat bounce. Let's see how far this goes, and take it from there. The only other thing that I like to talk to you guys about is just take a quick boo at some of the poop coins and what they're up to. I really do like this little bullshit index. I think it works really well. We talked yesterday about how I wouldn't have a problem with lower time frame players, or actually even higher time frame players coming in and buying this 88.6 tag. What I didn't really have any structure yesterday when I did the free videos, but what I did notice with talking with the kids here on the video this morning was you noticed this W came in last night, and look at this beautiful little W right through a reload zone. So remember, that was that 88.6 level. So, there is anecdotal evidence for a rally, and now we have higher highs and higher lows. As you can see, talking to the audience here on the site today, I basically said if I wanted to be a buyer of this, I don't have an account on this site, so I don't participate in this. But if I wanted to be a buyer, I'd probably be thinking somewhere down in here, which, I think I even said yesterday, love overlapping reload zones. So clearly, if we were going to try and identify where demand is for this thing, definitely like this sort of 810 to 870 area. Try not to chase, right? You know our rule, don't chase, don't chase, don't chase. And then finally, the only cryptocurrency that I really want to buy right now, which I can't get a fill because these guys are running the damn price up. Now we got W's coming in, jerks. I still got my bids. I want to keep working my bids in these gaps. This thing might take off, which would totally suck. But if I wanted to be a buyer of mana, I'm still just going to work my stinky bids. And if anything, I'm really lucky. Maybe we get a nice little fuck you candle here against these lows, and I get my stinky fills. But unfortunately, I'm not buying yet. Boo. All right, there's your market overview for Monday. Have yourselves a great day. Hope you enjoyed the marathon session we did on the broiler chickens yesterday. All the best, and bye for now.